Okay, welcome everybody to Southeast Asia Connect. We are starting in a few minutes while we see our attendees coming online. The numbers are climbing fast. I'm sure we are in for a new record today. We have fantastic guests and a super interesting topic. So, social commerce in Southeast Asia. Does it check out today? And it's episode 6, Chris. Chris, can you imagine? That means already, what, 3 months?
Lars, we've made it. We've actually cracked the 6-episode barrier.
Yeah, so next stop is first Golden Globes or the Oscars?
I'm not sure, but, I'm glad to announce that we are going beyond our initial 6 episodes, and we've got very interesting guests as well for the 7th episode. So thank you for all the community for getting us up to this milestone for us.
Fantastic. So let's get started at 5 p.m. today on July 30th. Welcome to Southeast Asia Connect. This webinar and series is brought to you by Precious Communications and Northridge Partners. It's the place where the money meets the startups, where the startups meet the idea, and it's all about fantastic experts and our live Q&A section where we'll answer your questions. So everybody tuning in, please use the Q&A section, not the chat function of your Zoom console, so that we can see, and you can also upvote the questions from the audience. We'll have at least 20, possibly 30 minutes for your questions, so please keep them coming in. Also, thank you to everybody who already shared them beforehand. So, my name is Lars Födisch. I'm an economist by nature, but startup fanatic by passion. I'm here from Precious Communications, and we work with over 300 startups, venture capital companies, organizations, and founders, and facilitated communications at the excess of over $10 billion for M&A activities. We're getting close to that number today, and my co-host Chris, the man for the money.
Head of Northridge Partners Asia, where we work with Southeast Asian entrepreneurs to raise capital, grow their businesses, and exit. On today's topic, social commerce, does it check out? McKinsey, just like many other experts, have noted that consumers have vaulted 5 years of digital acceleration in just the last 8 weeks recently. And one of the undeniable trends here is social commerce. For the purposes of today's discussion, we're defining social commerce as the facilitation of e-commerce transactions on social media platforms via communities and conversation, often but not always leveraging on digital influencers, but using social media to build customer attraction, trust, and loyalty. Now, what's all the fuss about? Well, Pinduoduo, the social commerce company in China, became the 3rd largest online retailer in just 3 years, stunning everyone's expectations. And then Jingling, another superstar, raised 100 million on its Series C late last year. Right here in Southeast Asia, in Vietnam, we have Ecomobi. In Indonesia, we have Mucho and other companies such as Fingo. Ecomobi has already done transactions in excess of US 150 million in GMV. And because to shop, you need money, today's episode, we actually have 2 investors to talk on this topic. And we are just simply very lucky to have, for Getting the Money Part 1, Helen, who's responsible for Southeast Asia for the legendary Chinese VC firm Qiming. Fund under management of $6 billion. Her firm is responsible for no less than 30 unicorns, and as an absolute ringing endorsement, has just closed a new $1.1 billion fund in April. Qiming has invested in Jingling, Mucho, Milico, and Fingo, which we'll talk about today. And for Get the Money Part 2, Sachin is at B Capital, a unique joint venture between Facebook co-founder and its first CFO, Eduardo Saverin, and, of course, Boston Consulting Group. And again, last month, just raised over $800 million. So I just can't wait to talk to the over or next to $2 billion of fresh funds in the room. But before we get to that, Lars, today's poll.
Yes, so let's have a look at the poll to get the discussion starting about social commerce. Is it the new fad? No, it will go away eventually. Yes, it will take over everything that's out there. Just a yes or no question. So not much thinking for our guests out there. So if you just click yes or no, and we hear the numbers are coming in, I'll just count it down. Chris, what's your take? Fad or not?
It's going to take over.
Take over the world.
Take over the world.
Okay, let's close the poll and have a look at the result. Yes, it will take over the world, 85%. Good. So I'm sure our guests, Helen and Sachin, are very happy because that's the right topic. And you have the big, the wallets to make it happen. So world domination. Kick it off, Chris.
Thank you. And Helen, starting with you, and really just to start to kick off, why social commerce? For those of you that are in the audience and aren't familiar with Qiming, Helen, can you kindly provide a brief introduction on Qiming and then your background and how you ended up running Southeast Asia for Qiming, please?
That was a stunning question.
Helen?
I think she froze. So why don't we start with, there she is. Okay.
Okay. Hi. Sorry. Yes. Thank you for the question. So yes, we are a venture capital firm, based in China, and we have been investing in the consumer internet for a very long time. On the topic of social e-commerce, I think it's especially interesting because I was involved with the Alibaba investment in 2003 and saw the rise of Alibaba and Taobao over the past 15 years or so. And I think that when people pose that question to me, is social e-commerce going to take over the traditional e-commerce? It's kind of a big question for me to answer because I still think, very well of Taobao. But I do agree that there's been so much growth on the social platforms, and that could be a very interesting change. And so for me, coming to Southeast Asia is really, looking at what has happened in China and being able to share some of my experiences with Southeast Asian entrepreneurs is what brought me here.
Fantastic. And certainly not only congratulations on your latest fund, but your recent investments in Mucho, Fingo, and Maluku. Can you kindly share, I guess, what attracted you to these investments and what was the thought process with reference to the investments that your firm has made in China? So, for example, with Jingling and also Mishutuan, or otherwise known as Shuhuituan, which is a community group buying space.
Hello? Yeah. Okay. So sorry about that. Okay. As I think about social e-commerce, first of all, I think maybe it's helpful if I just categorize what we think of 4 categories of social e-commerce. I think the first is we think of it group buying, which has Pinduoduo perfected the model and has become a huge company. And then the second wave, I would say, is like the Yunji model, where there is maybe there's a layers of agents, and maybe there's a membership fees, maybe there isn't. Jingling, the company that I invested in, is in this category without any membership fees, but they do have we call them agents that help to share their posts and help to get users to buy. I think the third wave that we saw, in China is what we call the as to B2C wave, where you actually have platforms. We have something called Kaoiku, which is a bit similar to Meesho in India, where they actually also have agents, but the agents are not just sharing the post, they actually do mark up the price, and they actually control the users. The users are not shared with the platform. And then I think we saw the fourth wave, which is community group buying. And that category was mostly on the groceries, fresh groceries. For that category, we've invested in Shihui Tuan, or in English, they call it Nice Tuan. And they've done pretty well. They're probably the #2 player in China right now. So I think when we looked at Southeast Asia, we felt that there were certain, characteristics which were common, to China. So for one thing, the social platforms have a huge user base. And actually, I think in Southeast Asia is even more interesting because we saw that C2C social e-commerce is actually very big. And if there was a chance to move that to a more professional B2C social e-commerce, the opportunity could be quite big. So when we looked at some statistics, for example, I think in Vietnam, the C2C social e-commerce is about 25%. In Thailand, it's about 48%, so almost 50% is actually the C2C social. So there's already a lot of sellers and buyers that are familiar with this, whole process of buying online, whether it's on Facebook or online or one of these social platforms. But maybe they're doing it in a very haphazard way. The sellers are sourcing from wholesale market. So if you can enable them to be more professional, maybe provide them with training, with supply chain, and help them to acquire users, that could be a new platform emerging. So that's the reason why we invest in Fingo. Fingo is active in Thailand and Malaysia. And then we did an angel investment in Mucho, which is in Indonesia, and they have since launched Miliku, which is a community group buying platform in Indonesia.
Yeah, you certainly did very well with Mucho, and Yiming is just so busy at the moment building his business. Thailand's quite interesting because, Helen, as I understand, Thailand globally is probably one of the largest, if not the largest, social e-commerce markets for them in the world.
You mean in terms of the social platforms?
Correct. For Facebook, Thailand's one of the key markets. Yeah. And big on this theme is really the acceleration thanks to COVID. Could you please comment in terms of, through your portfolio companies, in general, COVID has accelerated digital transformation, but in particular, how's it impacting on social commerce?
Yeah, I think that, the impact of COVID actually went through different phases. I think in the first phase, when the lockdown started to happen, you see that, there was a lot of logistical issues, right? Whether you could actually get the goods to the users, and then, in certain places, factories were even shut down. I think China factories came back the earliest, so the impact wasn't as big. And then you maybe had a bit of a higher cost in logistics, but on the whole, you still could get the goods. And then on the demand side, I think, during the lockdown, everybody was at home. So actually, I think we saw a pickup in e-commerce orders. But as the lockdown is gradually unwound, I think you see the economic impact on e-commerce users. So I think it has been a little bit mixed. I think some users are actually maybe more hesitant to buy goods that they are non-essential, whereas on the essential side, you still see continuous purchase behavior. I think in the longer term, that COVID would have accelerated e-commerce adoption, and so in the longer term, that should be a big boom for these e-commerce platforms that do well. Yeah, in terms of user conversion to e-commerce, that has definitely accelerated.
It's certainly an attractive model for investors because, as I understand, the customer attraction and retention and conversion is so much greater. But over to you, Lars, with our second guest, because we've got an avalanche of questions that we must get into.
Thanks. And just a reminder for everybody, we have the first Q&As trickling in. So please continue and keep them coming, and you can upvote, so that gives us a little bit of an idea what you're most interested in. So over to Sachin. We've heard Helen's comments regarding the last 6 months on social commerce activity. What's your take on it?
Yeah, first and foremost, let me thank you and Chris for having me on this panel today. It's great to be on, and also I hope everyone is staying well and safe through these fairly unprecedented times. Perhaps I'll just give a quick background on B Capital. As Chris mentioned earlier, we have raised our second fund, $820 million fund, and we invest primarily in the US, India, and Southeast Asia. We tend to have more of a B2B focus, perhaps in the US. In this part of the world, the consumer-led tech story is still very strong, and so we invest in both the B2B and B2C space. And we have a strategic partnership with BCG, which I think is very unique.
How does it,
in a nutshell.
How does it work? Because as you just said, it's a very unique setup. One of the world's most established and inspiring management consulting firms entering into this JV for a VC fund.
Yeah.
How does it work as a setup, and what's the strategic advantage that BCAP brings to the market?
Sure. So I think that Lars, we are not a captive fund. So we are independent. Our partnership with BCG is a strategic one where we have full access to their network and resources, and so do our partner companies. And I think for BCG, tech and the new economy has been really front of mind, and we are sort of that bridge and catalyst for them into that world, right? And I think that brings a lot of value to our portfolio companies as well, be it with customer relationships, be it with just the knowledge and sort of network pool that BCG brings to the table.
Good. So with the new fund out there and social commerce booming, what's your take on the social commerce space?
Sure. So we've been spending a lot of time on social commerce in the region. And Lars, pre-COVID, I would spend half of my time on the ground in Indonesia. And I think I would just start by saying, and Helen touched on some very key points already, so I'll try not to repeat those, but I think, the beautiful thing about Southeast Asia is really we have the benefit of hindsight, right? The new economy in this part of the world is anything between 3 to 10 years behind that of China and India, depending on sector. And so, we sort of, have the opportunity to see what's worked, what's not worked, and, how you can apply a nuanced and localized approach to some of these business models in the region. So, you've seen the Meeshos and Pinduoduos proliferate across China and India. And if you think about this part of the world, consumer behavior and the pain points are very similar, right? So it's still a nascent space, but as players find product market fit, different business models have emerged, as Helen touched on earlier, across different product categories, targeting different users, right? Based on city focus, based on demographics and whatnot. So, what we find interesting, and perhaps I will quantify that through an example, right? Both macro and business model. Take Indonesia, for example. Total retail GMV, depending on estimates, is anything between $200 to $250 billion. 85% of that flows through traditional channels. Tier 2 and Tier 4 cities make up 90% of the population, but 75% of this retail expenditure is coming from Tier 2 to Tier 4 cities. Bearing in mind that internet penetration in these areas are really low, at only 20%, right? So it's a very underpenetrated market still. E-commerce as a whole, e-commerce penetration as a whole is still low. So 70% of the population in Indonesia has yet to make an e-transaction, and it is in a hyper growth phase, right? So it's expected to double in the next 3 to 4 years. And on top of that, social networks have played a crucial part for internet users in a country like Indonesia, where 80% of total internet users are using social networks. So the sort of macro on its own is very exciting. And then one might ask, what are the pain points today of traditional e-commerce. And I think that can be, very quickly segmented into the customer side, where you still have low digital literacy, especially in rural areas. You have lack of online purchasing trust and awareness of brands. And social commerce really helps you alleviate these problems through the propagation of goods, through social channels, and through leveraging trusted agent and reseller networks. Customers are also able to embrace more affordable and local products, right? So if you think of the core value proposition of the social commerce players, it's to provide better access, choice, value, quality, and transparency, and convenience as well, layered through a deep sharing and social elements platform, right? And on the supply side, I think there are some great learnings from China, which I'm sure Helen can echo, where acquisition cost per user on traditional e-commerce channels have just spiked, right? So if you look at JD.com, it's increased nearly tenfold to about 1,500 renminbi over the past few years, while the acquisition cost for Pinduoduo is only about 100 renminbi today, with much higher user retention rate and better customer purchase frequency. And if you look at upfront and initial costs of doing business on Pinduoduo, it's less than 10% versus Taobao. And also you are able to sort of reactivate users quite organically through high frequency social media. And I would say the last component is really on the infrastructure side, where the main issue today in a market like Indonesia is logistics is expensive. There are 17,000 islands, and logistics accounts amounts to about 25% of the country's GDP, right? And the traditional B2C players just lack the right capabilities today, given they are sort of fighting it out in tier 1 cities. So given the sort of macro and given the three elements within the pain points and business model question, we find social commerce to be one that is particularly appealing, especially given the first gen e-commerce players are well defined, right? They are well defined, they are well funded, they have huge balance sheets, and so it's really about second, third gen commerce in this part of the world.
Fantastic. Well, there were some really good insights over there. Just maybe one follow-up question, because you touched on that with 70% of the population in Indonesia haven't done an e-transaction yet. Is the low penetration of credit cards or even the high number of unbanked or underbanked actually a way, an issue to hold the growth of social commerce back, or as an accelerator, because it kind of sidetracks to some extent the traditional model?
Lars, I think if you are thinking about business models outside of tier 1 cities, then it is an accelerator, because most of these business models have an agent and reseller network. And these agents and resellers act as a tool for customer acquisition, for product discovery and logistics, and they also manage the cash on delivery. So certainly outside of your main cities, I think social commerce is an accelerator.
Okay, fantastic.
That's actually quite interesting, because what we see is, a democratization of opportunity, if you like. I mean, social commerce is actually being able to amplify a lot of people's voices if they don't particularly have the money, especially with influencers. And then what we're looking at is serving these tier 2, 3, 4 kind of cities. And obviously, there's quite a lot of economic activity that is ex-Jakarta when we look at Indonesia. But Lars, on to, what?
Rapid fire, exactly. So rapid fire, just a couple of questions where it's a yes or no, left or right. You have to take your pick, yeah? So each of you should answer the question with a one sentence kind of answer, ideally. So social commerce, always been there and nothing new, or new social media is really changing buying and selling behavior forever?
I think it will change, yeah. I mean, can I say both ways? In one way, it was always there, but in another way, it's an upgrade and making it more professionally and more efficiently done. Yeah.
Okay. Sachin, your take?
I'm fully in line with Helen there.
Okay, then let's up it a notch. Social commerce will kill all online marketplaces and retailers, or only the weaker ones that are destined to die anyway?
I would say kill the weaker ones. Yeah.
Yeah,
Okay.
the weaker ones. The large ones are not going anywhere anytime soon.
Helen, Sachin, sorry, for our audience, can you disagree on something? We're going to keep on asking them until you
I
disagree.
asked him first this time. So with social commerce, will challenger brands have a better chance to compete and beat the Coca-Colas of this world? Yes or no?
Yes, definitely. I think you're seeing a proliferation of local brands across these platforms. So for sure.
Helen?
Yeah, I agree. I think in China, I mean, we haven't seen like major new brands, but then a lot, what we see is a lot of C2M. So where, you know, whether it's the agents or the customers, you know, they group together, and then they, with that scale, you can go to the factories and get a lower price. But I think that's because there is so much excess capacity in China, right, and on the manufacturing side. So that might not be a dynamic that is prevalent in Southeast Asia. But it's worked very well in China.
Okay, and then the last rapid fire question. Social commerce boom, driven by excited teens or bored moms at home?
I think more bored moms at home. and more by people who want to make some extra money. Yeah.
Indeed.
Okay, good. That was rapid fire, and over to the pitch with Chris.
With $2 billion of fresh funds in the room, all our founders are dying to know the answers to these questions. Helen, you're still actively investing, and quite understandably, like all VCs nowadays, there's simply too many deals to look at. Helen, if I was a founder, how would I begin to have the right conversation with you up front in order to engage meaningfully with you and your team?
I think for us, yeah, we're definitely very interested to continue to look at new deals. But I think that the key is, you know, does it fit into our investment criteria? So, you know, we look for fast-growing companies, typically in the Series A to B stage. So if you're too early, like if you're just doing an angel round, you know, it may not suit us. And also, if you're doing something that is in a more traditional sector, not in consumer internet or not in enterprise software, it may not suit us. So I think maybe just, you know, understanding what we are looking for and making your pitch, you know, very concise. I think that would be very helpful.
Fantastic. And one of the benefits of having your own webinar is that you can say hello and embarrass your friends who have joined. So hello, Bobby Lou, thanks for joining. And just related to that, Helen, has there been anything that's maybe changed in the way that you're looking at pitches in the last 6 months, and in addition, pitches online? So for example, one of our earlier guests, Nick from Cathay Innovation, has said right now he understands the companies on, you know, he's been a series seasoned investor. So what he's looking for is not necessarily a pitch, but reassurance instead. Has there been a way of, you know, the messaging that you're looking for now that's different from before, or you've always been longer term on these trends anyway, so there's been no difference over the last 6 months?
Yeah, I would say that we have been more long-term on the whole. So, you know, there's not been much difference in what we're looking for. But I would say that there has been, you know, a shift to more looking at, you know, the unit economics, not just growing for sake of growth. And also, I think, you know, having enough runway. So because we are not sure what the funding environment is going to look like. So I hope that, you know, the company can get to, you know, cash flow positive, or at least have a sense of, you know, how much runway do they need to get there.
And Helen, you know, everyone would love to absolutely have chicken on their cap table. Is there one or two things that I must not say to you to make sure that you don't run away?
No, I actually welcome any entrepreneur to come and talk. You know, I think maybe the most frustrating meeting sometimes I have is when people are not sharing much, and either, you know, because of some confidentiality or something like that. But you know, if you are really open to working with us, I'm very happy to talk more to you.
Okay, great. So Sachin, for yourself, I mean, you're just like Helen, walking around with too much money. But you know, what's the best way of engaging with you? I mean, what should this conversation have? Where can it start? And also, what shouldn't they say to you?
Sure, sure. Perhaps I'll start slightly differently, right? Because first impressions matter. And so when you meet a founder, I think what we are really looking for when we meet a founder is, a good balance between the macro, and that is the vision the founder has for the business, versus the micro, right? How deep the founder can go into the details when we're having a conversation. And it's also a good balance between sort of grit and hustle and confidence, yet, being humble and willing to listen and having empathy. And, essentially a founder who not just demonstrates strengths, but is also aware of his or her weaknesses, right? Where I think I can provide some perspective here is from a growth equity standpoint, right? So say at a series B or C in this part of the world, you are underwriting a pre-money valuation of $100 million with a raise of 150. That is, 150 post-money. And if you are going to underwrite a 5x exit to that, taking into account dilution and whatnot, you are almost looking at this, the business essentially reaching unicorn status, right? So what the founders really have to do is provide comfort around large outcomes. And so, at this stage, they would have, they would need to have demonstrated things like clear product market fit, strong elements of market leadership, a sustainable revenue or monetization model, and, high user retention and engagement, right? And things like unit economics and valuations and exit prospects can't be ignored as well. I think one frustration I've had personally is you come across founders who are raising Series B at Series C valuations, but at Series A business models. And I think given COVID and given the current environment anymore, those kind of deals are going to be, hard to do, right? So I would really say, founders need to think in the context of the investor's risk-reward profile and work backwards. In terms of not, in terms of not what, what not to say, paranoia is a great trait of all founders. And you do meet founders sometimes and you ask them about what keeps them awake at night, what the risks are to their businesses. And they say there are no risks and we have no competition and I sleep well at night. And when we hear that, we don't sleep well at night.
That's a very, very good statement. I like that, right? But,
Yeah.
but what's then the fine line between having confidence and also portraying that versus being delusional?
Yeah, I think again, depending on where you are in the stage of the business, if you have demonstrated that traction and that product market fit, we are backing founders who want to change the world, right? I think, many folks could have called, Elon Musk delusional, but there is some merit to that delusion. But again, it needs to be able to be quantified accordingly, right? Based on, the market, the product, the strength of the management team, market timing, traction, and unit economics and whatnot, right? So we are not afraid to back dreamers, but we back dreamers, based on quantifiable data, if it's available.
And for all the, for the one Elon Musk who we know kind of made it through, how many have failed on the way, right? Yeah. So, but it's great to hear you talk about the product market fit, because the first and most popular question, and we're going directly to the audience questions, is what would you see as the key 2 to 3 metrics, which are the best indicators of a product market fit for social commerce models in ASEAN? Metrics as best indicators of product market fit for social commerce models in ASEAN.
So maybe I'll have a quick crack at that, right? I think the rule of thumb for social commerce is low CAC and low logistics costs versus that of first-gen e-commerce. That's imperative, right? The second is having healthy minimum average order values, right? I would say these are sort of 2 key rule of thumbs. Besides that, of course, you want to look at things like scale. You want to look at things like density. You want to look at things like wallet share. You want to look at things like retention and engagement, right? And on engagement, pertaining to frequency of purchase and how AOVs have trended. I would say these are some of the metrics that we look for upfront.
Yeah, Yeah, I agree. I think when where there are agents involved, we looked at the retention and the engagement of the agents as a very key KPI. Yeah.
Okay. Then let's go directly to the next question. Thanks for our friend Rayan Pereira joining. What's your outlook on live video commerce platforms? Live video commerce platforms. Helen, you want to go first?
I'm not sure, are they talking about live streaming for e-commerce? Well, it's very big in China, but it's very dominated by the big players. So there's Taobao live streaming, and there is TikTok and Kuaishou as well. So I think I have not seen many business models that come out of that live streaming e-commerce, but there are influencer like MCN models where these are like in agencies for influencers. We actually invested in one of the largest called Ruhan, which is listed on NASDAQ. So that has emerged. Other than that, brands, we have invested in some brands that leverage live streaming quite well, but I haven't seen any independent live streaming platform started by a startup.
Okay.
Yeah.
Sachin, anything to add or?
Nothing to add there, Lars.
Okay. Chris, you want to take the next questions?
So, it's been quite interesting. What we found is when we first entered into the COVID period and when we looked at some of the frothy valuations, there was anticipation that there will be a lot more M&A in the market, and perhaps not directly on the social e-commerce, but certainly we have the opportunity to ask two prominent VCs. And the second thing, apart from M&A, was looking at potentially lower valuations. Now, I wanted to just ask Helen, particularly on M&A, according to news sources, the Sendo-Tiki merger is no longer going ahead. But Helen, just your thoughts on M&A. Will it happen, or why maybe we haven't seen M&A on consolidation, which we would anticipate in any downturn occur?
Yeah, I'm a bit surprised that has not been more M&A myself. When I saw the Tiki and Sendo news, I thought it made sense for them to do the merger. But I think there's a few reasons that maybe more, not more M&As have happened. One is there's still a lot of capital in the market. So if you read the news on Traveloka, they just raised 250 million. Travel is one of the worst hit markets. So I would have thought, something on the M&A side of things would happen for them. But it looks like they can, now remain independent. And I think that, for Tiki and Sendo, it seems like there is some strategic investors who do not agree. And we have seen that play out in China as well. I was involved with Mobike, which we wanted to merge with our competitor Ofo, but it was a bit complicated on the Ofo side because some of the strategic investors did not agree. So I think that where you have, strategic investors, sometimes their objectives are different, so that would affect the outcome. Yeah,
it's quite a surprise. And Sachin, I'd like to turn to you. I was anticipating a lot more down rounds, but actually what we're seeing more in the market, and I'd like your perspective, is it's actually quite healthy to see. I see a lot of great VCs saying, we should actually look at the long term. We should pay good value. We're seeing a premium for the high quality startups maintained. And if anything, the funding is coming in terms of bridges or just pushing out the valuation question till next year. So can you comment a bit about valuations and any sort of down rounds, or has there been calibration? Certainly the which is causing confusion to a lot of us, is the private equity markets certainly aren't down.
Yeah, I think that a few points here, Chris. One is, as Helen mentioned, market and institutions are flush with cash, right? There's been a decade of low interest rates. Capital allocators are hungry for yield. And so dry powder in the alternative asset space is at an all-time high at over $400 billion in Asia Pacific alone, and people need to deploy. This has naturally resulted in inflated valuations, especially in momentum-driven sectors such as tech, right? And I think, many folks have lamented on the disconnect between Wall Street and Main Street, and we've not seen a correction yet. Now, even if you look at things like down rounds and whatnot, post the dot-com bubble, in the sort of early 2000s, there was a lag period of about 18 to 24 months. And we are just sort of, 6 months into this, right? So I think, look, market timing is important, and, winners and losers will be defined during these sort of bust periods. I think, more often than not, it provides a good opportunity to press the reset button in a market a little bit. And, when investors get spooked and they sort of pull back, that can present many exciting opportunities. Again, a question here, just given how much dry powder there is that if the bubble pops, is there a bubble within a bubble, right? Just given how much funds have been raised recently. I think the more pertinent question is around the exit environment in Southeast Asia not having been validated yet. And the sort of 2013, 2014 sort of vintage funds are going to want to have to demonstrate DPIs to their LPs soon. And the question is how that evolves, right? And I think that's where the consolidation and M&A is bound to happen. But when that happens, the question is it going to be a 1 + 1 = 3, 1 + 1 = 2, or 1 + 1 = 1.5? And that will really sort of determine investor sentiment in the region for a while.
Which leads to, discussions around secondary sales, the bridge between VC and PE. And before I get in trouble from Lars from derailing the conversation, Lars, I know that you've got more audience questions.
Yes, they're coming in. We have still over 30 questions, and I know we won't be able, sadly, to answer all of them. So will there still be a role for retail stores or O2O businesses? What's, in your opinion, the role of retail in view of social commerce and e-commerce? Who want to go first?
Alan, I'm happy to take that. And I'm happy to take that because I think O2O strategies in this part of the world still do resonate. Again, depending on sector, we had the privilege of investing in one of the fastest growing coffee chains in the region, not the world, Kopi Kenangan. And it has a fantastic balance between online and offline sales channels. And when you are an F&B brand, that brick and mortar presence, that touchy-feely presence is so important, right? And they have a unique grab and go concept with online orders through their app and aggregators on top of that. So I definitely feel O2O strategies are here to stay. And you've also seen that, somewhat the reverse with like Amazon acquiring, the Whole Foods and, Alibaba sort of Hema stores, I think they are called. So, even the large sort of, consumer tech players have somewhat built out these O2O strategies, and in this part of the world, I think that's very natural.
Yeah, I think it's a very big topic because in Southeast Asia, I think the data I've seen is that offline retail penetration is also quite low, especially in certain countries like Indonesia and Vietnam. So I think offline can grow at the same time that e-commerce is growing. But if you look at China, in certain categories, offline retail is actually badly impacted, both by the COVID and by e-commerce. So for example, in apparel, I think it's about 40 to 50% online now. So I think that if I look at the future and I see that happening, I would caution a lot of players to invest too much in offline. I think what we do see in some cases in China, the O2O that has worked very well is actually having your shopkeepers, your store staff be your sort of agents online as well. So, during COVID, some of our companies that had offline stores, their shop assistants would actually have WeChat groups and then help to sell products through the WeChat groups. That really helped sales during a very tough period.
Thank you. I want to combine a few questions, and we also got thank you questions from people that registered throughout the whole week. One of them was, and I combined them. Normally business models are all about scale. So would it make sense for a country like Singapore to bring up a big social commerce player, or by nature it just can't be? At the same time, we haven't really seen many regional social commerce players, right? So how does it work together? Is social commerce just a very local country culture relation? And then, well, Singapore should just give up in that play?
You know, it's quite interesting, Lars, because when we look into it, what we have in Southeast Asia is just different dominant social platforms. So in Indonesia, WhatsApp is the clear winner. In Vietnam, we have Zalo, thanks to VNG, which is of course backed by Tencent. So that's, you know, and Facebook is the #1 in Thailand, but in Thailand for so long, Line has been prominent.
I think, you know, we still hope that our companies can be pan-Asian. So, but obviously, you know, everybody's aware that Indonesia is pretty big, is the biggest market. And after Indonesia, it would be Thailand. And then, you know, maybe if you combine Thailand, Malaysia, Singapore is can equal to Indonesia. And I think Shopee has a, you know, very big presence in Taiwan. So it's interesting that, you know, actually e-commerce in Southeast Asia is, you know, you really have to talk about, you know, each specific country. And but I think there are some, you know, there are things that you can learn, and like if you know, manage these agents very well, that learning is transferable to another country, and also your learnings around supply chain, around logistics are transferable. So that's what we look for when we look for social e-commerce companies in Southeast Asia.
Sachin, unless you want to add to that, I want to directly go to the next question because we have so many good questions lined up.
Sure.
Yeah. How do you view the unit economics challenge for social commerce? Low average order values, similar marketing costs per order to traditional e-commerce despite agent channels. And you elaborated already a little bit on it, but it was an explicit question. So I wanted, that was upvoted quite highly. So I had to ask it.
Great. That's a good question. Look, I think that, you know, a couple of points we sort of mentioned earlier, you know, we touched on earlier. I think that on the average orders side of things, it really depends on the business model, right? Are you a sort of S to B to C versus, you know, group buying versus, you know, direct to consumer, right? I think that, you know, the whole premise of the agent-based type, you know, group buying models is so that you are able to aggregate higher AOVs in general, right? I think if you are having a more of a direct to consumer approach, then yes, your AOVs are likely to be less. But those sort of models perhaps resonate more in tier 1. If your AOVs are extremely low in you know, more sort of semi-urban or rural areas, where your cost of delivery and service is just generally very high, then, you know, I think there would be some questions around the business model, right? I mean, we've looked at a number in Indonesia that have minimum order values of like $200 or $150, where, you know, they start by building sort of super agents that have these higher minimum AOVs. And then once they've built density, they onboard basic agents that then can transact at like $30 or $40, right? So there has to be, you know, some thinking behind it. That's on that point. With most of the models we've seen, sort of marketing costs, you know, we've tended to take more of a micro cluster approach. So we've looked at micro clusters where there's product, you know, where there's product market fit, to see whether, you know, again, the point we spoke around AOV, the other point around CAC, and whether those customer acquisition costs, because if you call yourself a social commerce platform, there has to be that element of organic referrals and sharing that takes place through it, right? And we've seen some interesting trends within microclusters, right? But as these companies are scaling, and because they are scaling so rapidly across cities, when they move into new cities and whatnot on an aggregate basis, the marketing, you know, may seem as high, or you know, vis-a-vis sort of, you know, first gen B2C commerce player, right? And finally, it's logistics costs as well. I think the biggest cost is around last mile delivery. And so you've seen some models here where they are direct to consumer, but they have an agent, but the agent's only role is essentially as like a drop shipper, you can say, that, just helps with last mile delivery. So, and that's keeping sort of, trying to, at least at a nascent stage, keep logistics costs to, single digits as a percentage of GMV. So I think many models have been tried and tested. Some have worked, some haven't. But these are sort of some of the interesting trends that we've observed in the market.
Fantastic. Helen, I want to shift to something that caused a debate in the Q&A here between the audience already. What's your outlook on community-based e-auctions in the B2B space, and how would that work? Can it work?
Community-based e-auctions. I'm not sure. For B2B, okay, I'm not sure I have seen something like that in China. Yeah, I think, well, first of all, B2B is very different, right? Category. So when we look at B2B business marketplace, our biggest question is, why do these players want to transact with you on the platform? Why don't they just transact offline, or once they don't know each other, because it's a high frequency business, right? And then I guess, but on the SaaS side, it makes sense. Maybe makes things more efficient. So yeah, maybe an auction B2B, it makes sense. When you say community based, I'm not sure what that community is about, but how is that different from a marketplace? Maybe I would ask the question back. Yeah.
Okay. Good. Yeah, B2B and social commerce. It sounds like it can't work, but I'm also cracking my head around it. I'm sure there are a lot of founders out there that most likely have the next big idea. And in a year we'll come back to this platform and said, yeah, we were debating it, but we missed that last kind of inch of how we could get it over the line to really make a big business model, maybe. Chris.
So we're getting actually a lot of questions in terms of Vietnam, funnily enough. Everyone's been chasing Indonesia for quite a while for obvious reasons. But Vietnam, we've been talking quite a lot about Vietnam being the next large country, which has fantastic demographics, will be a net sort of winner from some of the geopolitics and some of the supply chain issues. And we can touch on social commerce, but just again, we've got an audience that we want to make sure we answer their questions around. Sachin, if you can just touch on a bit around, will Southeast Asia become a net winner out of COVID and the relative geopolitics happening at the moment, and a little bit on Vietnam, and then over to you, Helen. It's a recurring question from a lot of our audience.
Sure. So maybe I'll touch a little bit about Southeast Asia, right? And as a region, it's really one that demonstrates growth, compounding growth, right? The consumer-led tech story here is absolutely fantastic, right? So, they're both these macro tailwinds, right? A demographic dividend, a middle class that has doubled, some of the fastest urbanization rates in the world, and also tech tailwinds, right? 100 million new internet users added, in the past 5 years. Internet economy expected to double, and it's a mobile first economy, right? So I think something like 90% of users use their mobile as their primary tool for the internet, and sort of spend in Indonesia, up to sort of 4.5 hours of mobile internet per day, so one of the highest in the world. So, in that context, I think, Southeast Asia is tremendously positioned. Historically, the region has also been a springboard for business between China and India. And given the sort of development levels there, there's only been a natural sort of focus towards this part of the world. I would say that, from an economic sort of regulatory, even social standpoint, fundamentally, the region is not a single market, right? There's mind-boggling diversity across, levels of economic development and political regimes and, languages, and hence localization is a deep competitive advantage, right? But, I think there are very sort of like structural, very basic structural inefficiencies that tech can enable and tech can help solve, right? Vis-a-vis, someone in a tier 3 city in Vietnam that has not had or has had a poor, access to traditional education is now able to sort of, bypass those traditional means and, tap an edtech platform to upskill, right? So, generally very bullish on Southeast Asia as a region as a whole. And on Vietnam, Chris, I think really the next wave is likely to come from Vietnam. I think it's a net beneficiary from the China outflows. It's an extremely, extremely resilient society. That's highly entrepreneurial, and while the infrastructure may be poor, kids are learning how to code in schools, right? It's the second largest labor market. It's been growing at a GDP. I mean, just look at how they've managed COVID. It's still expected to grow at a GDP of 6 to 7%, and I think that it presents. It presents many exciting opportunities, Vietnam. And if you just look at internet sort of penetration as a percentage of GDP in Southeast Asia, it's the highest compared to its regional peers.
Over to you, Helen. You've got an amazing head start in Southeast Asia with Malaysia, Indonesia. Would like to just get your thoughts on Vietnam and Lars, sadly, that's probably all we have time for questions for. But Helen, Vietnam, please.
Sure. I have been to Vietnam a few times to look at companies. I think the biggest challenge we find is that the low GDP per capita aside, I think very often Vietnamese entrepreneurs are only focused on Vietnam and may find it hard to scale outside of Vietnam. And then other entrepreneurs from outside of Vietnam seem to struggle to do business in Vietnam. So we haven't found, that how can it be a bigger opportunity, right? Beyond that 90 or 100 million people. So that has been the main challenge. Having said that, we do have a company called VN99, which is like a Toutiao news aggregator model in Vietnam that we've made an early investment as a first bet. Yeah, so we continue to monitor the market to see if there are interesting opportunities that can emerge.
Okay, thank you very much. We also have tons of questions just about India, so I think we have to do an episode just on India soon. Unfortunately, we can't bring them up in the interest of time. One very last question I have to ask Chris. I was always wondering, but luckily it was somebody else asking. Chris, how do you relax? And please, in a sentence or two, explain your robot collection in the back of your room.
Before I had a wife and kids, I had some disposable income to buy all the toys I never were able to buy when I was a kid. So these are Japanese Gundams and Mazingas, originated from Japan in the 60s and 70s. And the reason why they're on the high shelves is, of course, so that my kids can't touch and play with my toys.
Good. So I think that's what we have for today. We had some fantastic insights. Thank you so much, Helen and Sachin, and also some great sound bites, right, Chris?
Yeah, amazing sound bites. Again, thank you so much, Sachin and Helen for coming in today. Paranoia is a great trait of founders. I'm struggling to find the best soundbite because there were so many good of them. So paranoia is a great trait of founders. When founders say we sleep well at night, we are not able to sleep. Sachin, thank you.
Hopefully I sleep well tonight and everyone else too.
And last, maybe, again, sorry, I'm going to find a friend because there were so many good ones. Last, have you got one for Helen?
Again, Helen had so many good ones as well. I'm just one of the things that we looked at was I think what was interesting to really look into was talking about I think it was just really the sharing of your insights about the early investments into China, and then combined in how the story developed today was about, what then Sachin later called the foresight So we actually can sit, relax, see what already worked, and take the best off, and then focus on that. So I thought it was a combination of real great insights, not necessarily just one or two punch words.
Well, you know, 30 unicorns later, I'm sure there's a lot more that we can learn from Helen, certainly.
Good. So thank you very much. And thanks to the audience, but especially to Sachin and Helen, to Chris, and also the Northridge Partners and Precious team behind the scenes that made it happen. And hopefully you're tuning in again soon for Southeast Asia Connect.
So our 7th episode, which will be in the fortnight, will feature Paul Myers, who is the person that set up the Asian Development Bank ESG Fund, and prior to that was also the head of Muradi Accelerator. If you are new to Southeast Asia Connect, your email has been added to our mailing list. You can always opt out, but this is our way that you can stay informed on our upcoming episodes and queue up your questions earlier on. Most of all, thank you to our listener community for being here. Together, we are harnessing technology to build a better tomorrow. I'm Chris Tran, signing off. Goodbye.
All right.